Back with our market experts, Mario Gabelli, Jack Gage, Peter Schiff. Peter Schiff, I'm going to put up on the full screen a bunch of credit spreads that are really declined and narrowed a lot. Uncle Ted, which is LIBOR versus the T-bill. Look at that thing. That thing's way down. I think it's the lowest in 4 or 5 years. Even at the yield curve, investment-grade bond rates are coming down. Look at your Moody's Baa rate. And my absolute favorite, I got a 2-year swap spread and the stock market. All right, they're inverted. But you can see that swap spread, which is inverted, that has come down so much that it is suggesting a massive rally in the S&P 500. So, Peter, I know you don't agree with this, but I want to give you a whack at it. Is it possible in the short run that all the Fed pump priming and all the statism and bailout nation of the Treasury in the short run is going to be very positive for stocks?
Well, I mean, look, anything can happen in the short run. We've come down quite a bit in a short period of time. I mean, the market could rally for any reason whatsoever. I mean, and if it does rally, it's not because of all that stimulus. It's despite it all. But ultimately, any short-term gains that we might register are going to evaporate because what the government is doing is damaging the economy. We have some real structural problems in our economy that we need to address. Unfortunately, what the government is doing is making these structural problems worse and making it more painful to ultimately correct them. So if there is a rally, people should sell into it. And if there's going to be a rally in the U.S., the rally will be twice as big outside the United States. So I think it's still better to sell U.S. stocks and invest abroad. If there is a rally, you're going to get in on it. And if there's a rally, there'll probably be a sell-off in the dollar, so you'll make money twice as fast abroad. And maybe the rallies internationally will be real, because I think the global market is pricing in a global depression that is not going to occur.
Right.
These are America's problems. You know, we owe the world a lot of money, and so our creditors are hurting.
Okay, hang on. Let me get Mario's take on this. Okay, Peter makes some strong points that the government is going to, in the long run, do more harm than good. In the short run, there may be a rally, but you should sell into it. How do you react to what Peter Schiff is saying?
Well, we're buying businesses run by good bit management, and we're buying them at a discount from intrinsic value. We're looking out over the next 2 or 3 years. We're not making 50%, Larry. We're going to make doubles and triples on the investments that we can pick. So you've got to buy stocks. You want to buy the old markets and do ETFs, you're trading soybeans, you're trading commodity, you're trading oil, that's great. That's not the game I play. We are investors. We're buying businesses that sell goods. And
time frame, time horizon, 5 years, 10 years?
No. I think 3 years or 2 years. And look, we also want to, for taxable accounts, it's not what you make, but it's what you keep. So if you're day trading or you're buying things like commodities, you're paying a 45% tax. We're going to make 15, maybe 20% tax on our gains a year and a half out.
What do you say to people? Okay, they read this Wall Street Journal front page. Stock investors lose faith, pull out record amounts, $72 billion.
Are you reading this? This is the Wall Street Journal 1930. This is the Wall Street Journal 1975. This is the Wall Street Journal today, Larry.
Wall Street Journal 1982.
It always happens.
So you think that people should disregard this front page story?
No, I think it. You know, you got to read something, Larry.
Well, you don't have to.
You could have read about the Giants last night.
Right,
if
much better.
You could have watched it. And
but, I mean, this is, what is it, Jack Browning or Jim Browning. He's E.S. Browning. He's a very good reporter. So you're basically saying this is the kind of stuff you see at the bottom. Is that what you're saying?
I see it all the time. I was just in Zurich. I was in Geneva. They're bearish. This is good.
That's a bullish sign. If the Swiss are bearish, that's a bullish sign, isn't it?
But this is pre-Madoff. And they're probably more so today. But that's okay, because when you look at things like that, and you look at the notion of confidence being at an all-time low, I like that, Larry. Yeah. This is terrific.
I think there'll be a lot more bearish at the bottom. I think you're going to be seeing bond prices also collapsing by the time we're at the bottom of this thing. It's not just going to be a bear market in U.S. stocks. The bonds are going to be in an even bigger bear market before the stock market.
Bonds,
but when I can buy a company at
I'm talking about governments.
But when I buy a company at a 20% discount from the current price, and I'm buying a company that over the next 5 years can have pricing power and they're cutting costs.
Still
this is
maybe.
Terrific.
I mean, it depends. I mean, if their customers are abroad, maybe. But if they're in the United States, they might not have the pricing power. Their customers might be broke.
The United States is 18% of 25% of world GDP. 18% is the U.S. consumer. That's 50% more than China, Russia, and then Brazil. And if we can't get our engines started, good luck.
All right,
well, that's going to change when the exchange rates realign.
Yeah, listen, Jack. Now, Peter Schiff makes a strong point about the dollar. Okay, the Fed comes out last week, Tuesday, shock and awe, balance sheet sheet expansion,
Right.
zero interest rate, unlimited pump priming, buying bonds such that, and I agree with Peter, there's a government bond bubble, a treasury bond bubble. Why would foreigners invest here if the dollar is going on another sinking binge? Wouldn't we be better off investing overseas? Why would they come here?
Right.
In fact, why would investments invest here with a sinking dollar?
You know, with the Fed's pyrotechnics, the gold did a big yawn, and you know, I still think that a strengthening dollar long term is good for the U.S. economy. When Peter says about investing abroad, I'm not sure where he's talking about. Is he talking about the U.K., where financial services jobs are 21% of the job force as opposed to 4% in the U.S.?
I'm being more selective than that.
The commodities bubble is popped. I'm not sure where you go that's going to give a better rate of return than a recovery.
Yeah, but by the way, I can't ignore Peter. And that is that I was just in Hong Kong a couple of weeks ago, and I found bargains there. I found companies in Japan selling below cash
Companies
value.
in Japan.
Oh, it's incredible.
Japan, like, kick them on.
So you agree with Peter Schiff in international investment?
No. I'm buying stock specifics, industry specifics, international investments. At the beginning of 07, the common knowledge was buy China, buy Russia, buy India, buy Brazil. You're down 80%.
If you waited till the peak to buy, but what if you were buying 5 or 10 years ago? You know, whenever you have major bull markets...
Listen, if I bought Wrigley's 5 years ago, I would have cash in the bank and I would be way ahead of the game. You know.
China's a big story. It's not a day, it's not a 1 day, a 1 year.
But we
this
also
is a
don't
generation.
know what's really happening to their economy.
Peter, what's the single biggest factor that moves you to recommend foreign investment rather than U.S. investment? If you had one thing to point to. I've shown you my hand. My cards are on the table. 6 mustard seeds. What's your card for global investment?
I think it's trying to get off a sinking ship. I think I said there are some serious structural problems with our economy that are going to result in a major economic collapse and a huge decline in our currency. And unfortunately, the government, as I said now, is making the situation worse. They're socializing our economy. They're interfering in ways that are only going to make our economy and our markets suffer more than they have to. And I think until they stop doing this, until we can have a meaningful recovery, investors need to preserve their purchasing power by getting outside the dollar.
Mario, how about capitalism and not statism for a change? He's got a point on that, doesn't he?
In 1989.
I mean, I'm a short-run bull. These mustard seeds, I'm going to argue till I'm red in the face.
But in 1989, the Berlin Wall came down, and you had a war between Karl Marx and Adam Smith for 180 years.
Adam Smith won.
And now we're going through a new process.
What is this?
Got to adjust.
Is this a temporary new process, this government takeover?
If you read the press...
Is it temporary?
If you read the press of 1974, 34 years ago, we had high inflation. We had just coming out of a war, still mired in Vietnam. We had a president that was resigning. You had a lot of sentiments like that. And you had
we're in much worse shape now, though.
Jack
and we're going in the wrong direction.
All right, hang on. We got another segment. On the way out, Jack. Will President Obama instill confidence, okay? Business tax cut or not. Will he instill confidence? It's a psychological thing. What do you make of it?
I think he will. Short term. I think longer term is another question that you start getting into the economic policies he'll put forth. But short term, I think when you look at whatever job creation does come out of this stimulus will be good for the short-term psyche of the country.
What if Paul Volcker is tough on GM? Volcker is right by his side. What if Larry Summers includes Mario Gabelli's tax cut? You know, I want to slash the corporate tax rate, but Mario's right.
Obama's going to be terrific.
I mean, Obama's polls are very good. I acknowledge it's a honeymoon. I'm Jackie Gleason. I've been an Obama honeymooner on this story. But could he be a more positive, 1,000, 1,500 point factor here?
I think he could if he so chooses. I wish he would listen to Volcker even more. And read the
Volcker wants to eliminate FASB 157.
Right,
suspended for 15 months.
Everybody's going to come back. Peter Schiff, Jack Gage, Mario Gabelli, stay right where you are. Got some more to drill down on. I'll tell you, in the short run, I don't believe it. Money supply is booming, and retail gas prices are plunging. That's got to be good. Don't go away. I'm Larry Kudlow. We'll be right back.